Comments made on the following paid commercial program are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time.
Welcome to the Money and Wealth Show. On the program this week, tax tips with David Ingram, money commercials, and our special guest, Victor Adair. Welcome to the Money and Wealth Show. I'm Sterling Fox, and it's a real pleasure to welcome back to the program former broker, broadcaster, and financial analyst Victor Adair. Good to see you again.
Good to be here.
It's been a few months since you and I crossed paths on this program. You're not a full-time broker anymore. You're a semi-retired kind of guy. What are you up to these days?
I play a bit of golf.
I'm sure you do.
Now, I'll answer that truly. I am semi-retired. I do trade my own accounts actively. I don't manage money for anybody else. I'm not trying to sell a newsletter. I'm not trying to sign you up as a client or anything. I'm entirely altruistic in a true libertarian sense. What I do with my own affairs, though, I divide my financial world into two parts. I've got my savings, which are very liquid and very conservative. And that comprises, let's say, 2/3, 3/4 of my net worth. The balance I have in my trading accounts. And in my trading accounts, I trade pretty much exclusively exchange-traded derivatives. I was a stockbroker for 35 years. I know something about buying and selling stocks, but I feel as though I've got a little more expertise in the derivative market, so that's where I stay. But I think for everything that I'll answer for the rest of the interview here, if you understand it comes from the context that 2/3 to 3/4 of my net worth is basically cash in the bank. Okay, that kind of reflects more than anything else I could say my view of where we are in the world right now. In other words, look at what he does, not what he says. That's what I'm doing.
Derivatives is a scary word. I'd like you to take a moment on that because derivatives, a lot of us like to flatter ourselves that we think we know what these things mean, and most of us don't. All we remember is derivative trading issues caused the collapse of Lehman Brothers and Goldman Sachs and all of those horrible mega-billion-dollar bailouts a couple of years ago. Yeah. What are derivatives, and why are they so appealing to you?
Well, for me, derivatives are futures and options contracts that are traded on exchanges. The word derivatives encompasses a whole range of things that are well outside of that. Particularly the things that you talk about that got everybody into trouble were off-exchange products. Specialty stuff, bespoke stuff that was cooked up by Wall Street for their customers, whether the customers really needed it or not.
Okay. You also said something that a lot of us picked up on right away. You said, a great portion of my net worth is in my savings, in cash, in the bank. Yeah. And, that's the ethic that all of us were raised with in Canada. You set aside a certain percentage of your income and you create a savings program. We've gone from that education, and you and I are probably products of the same school systems, to the point now where very, very few of us are savers anymore. What happened?
The short answer is the marketing machine told us we would be happier if we went into debt to get everything we wanted now instead of waiting for it. And we believed it. And we saw the people around us doing that and having more fun, so we wanted to go along with them. And that was, I think, the emotional response to this generational credit boom that we had, that I've talked about before. We had a huge credit boom, led to an asset boom, led to a great willingness to take risk or an appetite for risk, and then that led to where we're at now, which is a post-credit bubble collapse. And I think this is going to go on for some time, hence most of my net worth is very liquid and very safe.
What sort of time frame would you envision out from midsummer 2010 in terms of how long this recession, correction, depression, call it what you will, is going to take to get through?
Well, get through to what?
Well, good question there.
Yeah, get through to how it used to be. It ain't ever coming back.
Okay.
The gentle expression is the new normal. But I think we're going to have an uncomfortable number of years.
And that is at every level of socioeconomic in Canada? All people are going to be uncomfortable to one extent or another for probably 10 years.
I think that I have an expression that I've used, and that is that way more money has been borrowed than is ever going to get paid back. Now, the market knows that. It's just that sometimes that's a problem, and we really get scared about it, and other times it's something we can worry about in the future. And that willingness to take risk as far as trading is concerned, and willingness to wanting to avoid risk is basically what drives the markets these days. And it's my assessment of the market's willingness to take or avoid risk that pretty much drives all of the trading that I do in my short-term trading accounts.
And are you one of those who subscribes to the theory that you don't try and tell the markets what's going on, you wait and let the markets tell you what's going on?
No, well, yes, Ben, what I do is I anticipate what I think is going to happen in the market, and then I wait for the market to tell me that it's happening, and then I take a position. I don't say, I am right and the market is wrong,
right.
and take a position because I've just got this great idea. I wait until I see some confirmation in the market. All I'm trying to do with my trading account is, on the one hand, kind of keep my hand in, stay educated, and see if I can't make a little money while I'm doing it.
Our guest this week on the Money and Wealth Show is broadcaster, financial analyst, and former broker, Victor Adair. A pleasure to have him back, and there's lots more to come. Stay with us.
Good afternoon. My name is Larry Ray. I'm the president and CEO of American Manganese, Inc. I'm here to tell you today that American Manganese could possibly bring in the lowest cost electrolytic manganese metal mine in North America. It'll be the first one in the past few decades. What is manganese? Well, you can't have a steel industry without manganese. If you don't have manganese, you don't have steel. If you don't have steel, the world stops. North America has no manganese. We depend on our neighbors and other countries to import our manganese, and it just doesn't make any sense we don't exploit the resources in our own country. So I'm here to tell you that we are moving ahead with the feasibility study, we're moving ahead with the environmental studies, and we're moving ahead with a massive drill program in order to build the American Manganese, Inc. into the first primary electrolytic manganese producer in the United States. Please visit our website at americanmanganese-inc.com or call us at 604-531-9639. Thank you.